Welcome, everybody, to another episode of the None of Our Businesses YouTube show and podcast. We come here at you weekly to talk about current events in business from an accountant's perspective. And with me, two great accountants, as always, Charlie Zigman and AJ Wheeler.
How's it going?
All right. Well, glad to have you guys with me again to do this as always. I think we decided just a little bit before we started that Charlie was going to kick us off, right?
Yep. All right. So I've got an article from a source I've never used before called ProPublica.org. And it's the article title was Different Names, Same Address, How Big Businesses Got Government Loans Meant for Small Businesses. And so what they did is ProPublica used a tool where they were able to look up and take the data of who had gotten PPP loans, and they sort of scraped it looking for a way to be outraged about it. And the way that they found was that they found they found a bunch of companies that had used the same address. And so basically it was like 15 small limited liability companies that had all applied for a PPP loan with the same registered address. And then the ProPublica did the research to find that they were actually one larger company that had subsidiaries. And then, put together a big article about how that isn't fair and how it was meant for small businesses. And I guess I want to get your guys' take. This is kind of similar. We've talked about this before, but, it's kind of like, where do you draw the line? There's things built into the PPP loan that are designed to stop related parties from getting too much of a loan. And so I guess it's like, if the rules are written well, then companies should be able to apply. And I think also the outrage of having a large employer get a PPP loan is questionable because large employers tend to have a large count of jobs. And so I want to get you guys' take on it. Is this a valid reason to be outraged if one large company with multiple subs gets multiple PPP loans?
Yeah, I mean, I think it could be a valid reason, but I think that it muddies the waters that you don't know the specifics, because as you said, the rules should have prevented this, more or less, right? There were what were called the affiliate rules. And so, most companies, unless you were in the restaurant or hospitality industry, you had to look at whether you were a small company by the number of employees. And I think there was some other kind of metric that that counted towards whether you were a smaller company. And that metric should have been applied against you and all of anything that would qualify as an affiliate under the SBA rules. Now, it's complicated because I looked at this with a couple of clients, and it wasn't exactly clear in some cases whether you would be considered part of affiliates under the SBA rules. And this was a real problem for a lot of venture-backed companies, small businesses that had venture capital investment or PE investment, because it wasn't clear whether they would be considered affiliates of the other portfolio companies that the venture capitalists or the PE firms had invested in. And so most of us were talking to lawyers at the time about whether we could get these loans or not. And the going advice in those cases was probably not, but we didn't know for sure, do we, and really, do we want to take that risk or not? And in the case of the companies I work with, we never did take that risk. It seemed that it wouldn't be appropriate because of those affiliate rules. So I think what is, I would say, yes, the case discussed in the article could be reason for outrage, but it's hard to know for which reason exactly to be outraged. Should we be outraged because this is an example of a company who just flat out broke the rules and got the money anyway, and so they should be caught for the fraud or the signing off on statements that they shouldn't have signed off on? Or should we be outraged because they actually did follow the rules, and following the rules can still lead to these results that some people think aren't as appropriate, right? And I think that not knowing what exactly you should be outraged over kind of muddies the message in the article to some extent, because they really don't know what the case is in this scenario. If these companies just flat out broke the rules, or if this company worked within the rules and got a benefit that maybe wasn't intended that way by Congress or whatever. I like the way you asked the question, though. I mean, you sidestepped that by just saying, well, in any case, should we be outraged at all for a big employer getting PPP money, because a big employer in this case has a lot of jobs? I mean, it actually is the case that they have a lot of people working for them, and so in theory, big employers could be using the money to support paychecks just like small employers. So yeah, I mean, as we've said before, it's like the PPP was touted as a small business program, but it wasn't clear that it actually was exclusively used by small businesses. Go figure.
Yeah.
Well,
That's
yeah,
something to be outraged over or not. Yeah.
I don't know. I'd put out another reason why separate businesses would have the same address. I mean, I've seen those. There's kind of like a YouTube community that does like drop shipping. They get into different drop shipping and personalized like product kind of sales. And so you very well could have somebody running multiple entrepreneurial ventures that have actual employees that they could leverage PPP loans for having the same address, you know?
Totally.
Yeah.
And like in the kind of one of the reasons I brought this article up was because in their like fervor to get people outraged, they mentioned that one of the people who got a PPP loan was a company that had Medicare's lowest 1-star rating, and as if that was like a reason to like not have a PPP loan. And I just got kind of a kick out of that because it's like, wait, we're not, the PPP loans, rules aren't that like people would say it's a good company or that, or that they do Medicare's rules well. And so, yeah, I just think somebody's looking for a reason to be upset and they found one, maybe.
Well, there was another outrage related to the government website that was put up for the PPP loan search. So anybody that can go to this new website that's put out and search a company and find out basically an idea of how much the company was loaned. I did a couple of searches for companies that I knew, and they seemed all reasonable to me for the amount that was listed. And so, but this article kind of goes on and says that there was a lot of mistakes, I guess, that they found, and saying that, some small businesses that they contacted that only had maybe $100,000 to $250,000 loan were listed as having millions of dollars or like above $1 million in that website portal. And I thought the reason why I bring up the issue is I think, do you guys think this is surprising that the governmental website has some, I guess flaws in it, in the data that's uploading or that they're pulling from? And B, is it a reason to be upset, I guess? Or you think people are using this tool to kind of like gauge which businesses they're going to give their money to? Because the article kind of alludes to that people will have a misconception of these businesses if it appears they borrowed large sums of money, which could or could not be true in that database.
Yeah, I thought that was questionable. I actually, as I was reading that article, I thought to myself, who is this person who is like, literally like they're getting ready to go get dinner and they like take the time to let's check the PPP loan status, make sure that we should be, how upset should I be before I order? And so I'm not a fan of that idea.
Yeah, it doesn't sound like the average person would actually be doing that. But I mean, the whole thing about creating this whole public disclosure of who got the PPP loans was this, I mean, yes, it's interesting because how you do things creates the environment, right? Because it's like, well, being transparent about who obtains PPP loans sounds like a good idea on the surface, but then making a big spectacle of listing, and everyone going to look, which businesses and did my favorite businesses and did the businesses I like or don't like, who got what in the PPP loans, it is kind of, well, what exactly is the purpose of that? And us, really cynically, you can say the purpose of that is so that the public can make judgments on whether they think those businesses should or shouldn't have gotten the PPP loans and how much money those businesses do or do not have. And I think that is the inherent problem with transparency of information in general, is that providing information without context is not really providing real information. It's, data without context. Actually, what I should say is all this information is on these PPP loans that people go look at companies or businesses and they see what they got from a PPP loan. For the average John Q public, that's not what I would call actual information. That's just data. It's data without context. So they can't really because they can't put that data in context, they can't gain any real meaning out of it. And the problem in our world today of people just capturing lots of data points on social media and other outlets, and then people are used to creating their own information in their head or through talking it out with other people on social media who don't know what they're talking about. And so, yeah, I can understand why some of these businesses who were talking about this are a little bit upset, because people have data points on their business that aren't even not only are they data points without context, but they aren't even the correct data points. So that, that's even worse.
Well, and the rules were uniform. I mean, if you really think about it, the facts of what people were given in PPP money was based around what their payroll expense is. So as long as you can just believe that that was administered well, then there is no information to share. Everybody got one fraction of their payroll costs, and everyone got that same fraction theoretically. And so seeing the numbers on a website really shouldn't make you feel better or worse if everyone got the same, percentage of payroll, for example.
I think, yeah, and I think the context that you're talking about, Ty, is the people are missing the context. Is it's a loan until it's forgiven, which the forgiven steps haven't even been laid out yet. They haven't finalized those. So right now, everybody has a loan that's not drawing any money, and the forgiveness portion of it falls under rules. And so I guess my point that I'm making is, what does it matter if somebody had $500,000 loan that's possibly forgiven, or a $1 million loan that could be forgiven? I don't necessarily know why anybody should be getting up in arms about it.
I think having the data at scale can allow some good analysts, maybe some good reporters, to put together some analysis and draw conclusions and see things about, in general, what kinds of companies, at what income levels, what observations can we make, doing some really good analysis to put context to the numbers. But I think, I'm not in journalism, so I may not be right about this, but I think this strikes me as being somewhat unusual, because I think other government data like this that is subject to the Freedom of Information Act, there's journalists can put in requests, and there's channels where they can get that information, and then they can put it in context and report it to the public. Yeah, this seems kind of rare to me, that the government is actually curating the data together and throwing it on a website to spoon feed it to people. It just seems like morbid curiosity, right? It's like things that people want to know, but they really don't have any reason to really know it.
You do the same with governmental salaries and stuff. Like all public servants or whatever, their salary information is available. And I always think to myself, okay, but why? What do I really care what, a judge makes or what? I guess I care in some way, but yeah, I've never thought to use it.
Well, I think thank you for that reminder, because I didn't think about that, but that's true. And so maybe this is more like that, and maybe, throwing all the data on a website like that in that regard is somewhat appropriate. It just feels like somewhat of a carnival sideshow. They're the way they're presenting the data is making it into more than it needs to be in some regard.
Well, maybe they did that because of the backlash they got. Everybody's complaining about who got loans. We've done articles on this, these multi-million-dollar companies, got loans. And so I think probably this is a knee-jerk reaction to it. Oh, well, here, you guys figure out who shouldn't have got it, and kind of opened it up to public debate about it.
I've definitely done that same strategy where I've been frustrated by a question I've been asked, and then in an attempt to get it resolved, I'll just throw all the information I can find at the answer. And so I can kind of see how they would think that's a good idea. Yeah, I can relate. All right, so I got another one just kind of branching off this topic. From NPR OPB, there was an article called Red Ink Overflowing in June. The U.S. borrowed a typical year's worth. And so we're always looking at these, loans and thinking about what businesses should or shouldn't have gotten them. And so I just want to take a second and talk about the other side of the coin, which is that, the U.S. is in huge deficit due to all this coronavirus money that it's giving out, but also due to delay on payments because the tax deadline was extended, which led to less money coming in. And so there's kind of this confluence of events that are all leading to a deficit. they said that there's only 3 months left in the government's fiscal year, but the deficit is already nearly twice as large as it had been in the previous largest year, which was the Great Recession in 2009. And so I want to get your guys' take on whether or not you feel that, was this necessary? Were all these measures like the PPP loans and extending the tax deadline, something had to happen, but were those too much of a reaction? And will we be able to recover as the U.S. given this huge deficit?
That is a very deep economic question, right? I mean, I think if we take this topic on the surface and say, is it surprising that we're running a major deficit right now, or that we're running up a huge bill right now? Let's say it that way. No, we're spending a lot of money, and so I don't find that surprising. I guess I should be careful not to wade into the deep conversation of should the government just spend a shitload of money to prop up the economy? Is that a thing to do? I kind of think it is, but I mean, I think there is, of course, this is the great debate of economists and politicians, and it's a big topic.
Yeah, that's a lot to bite off, man. I mean, I guess I would venture to say everybody around the world probably is having similar problems in all the developed countries. To the fact that it's as big as the U.S., I don't know. But, I mean, I think just like in 2008, something had to be done. And especially with it being an election year. I mean, you're talking about, I guess nobody I've heard has talked about the deficit or been concerned about it. I mean, I think everybody in America's kind of mind is on the pandemic and how they're going to get through this personally and the people around them. So I don't know. I don't know that there's any other way than to prop it up the way that they've been propping it up.
Yeah, and it's always hard to know what the other outcome would be anyway. So it's like, the options were either have this gigantic plan in place with all the spending or let things fall apart and see what that costs. And so it's like, because that's such a ridiculous question, yeah, it's hard to know. But yeah, I just thought it'd be a good topic for discussion.
Yeah, I mean, I think it's, my understanding of monetary policy is not very good. So this is one of those areas where I have these like opinions that are based on what I know is a weak understanding of monetary policy. But I feel like, yeah, it's borrowing, the U.S. deficit borrowing money to spend is, I think it boils down to a question of printing more money now or printing more money later. Which then comes to a question of, is inflation bad? Is printing more money and devaluing the value of each individual dollar is that necessarily a bad thing? And I don't know if it's this simple, but I think it's related to, because a different way, I think that inflation like that caused by printing money now or printing money later, if you're borrowing, is really kind of a indirect tax on wealth, right? Because essentially what you're saying is for all of those across the country who have piles of wealth piled up, if we start printing more money, we're devaluing those piles of wealth. The alternative is we just tax those piles of wealth. So I think it's just a less direct way of taxing those piles of wealth, one way or the other, in order to get the economy and support the public. We end up basically taxing directly or indirectly the piles of wealth around the country. And I think this kind of monetary policy is just kind of a hidden or an indirect tax on wealth. And so then if you go to that question, you say, are you okay with it? Yeah, I think I'm kind of okay with it. I'm comfortable. I guess I don't consider myself to be one of those who has piles of wealth. So maybe I'm okay with it because I'm not somebody who has piles of wealth. But I think it makes, I'm okay with that policy-wise and political-wise. Probably no coincidence. I'm okay with that, and I'm sitting in Portland, Oregon. So yeah, I mean that's the that's the nature of the politics of who I am and where I am. So yeah, I think I'm okay with that. And I think we have an article that kind of looks at the alternative on this whole thing too, right? Where I think we have that coming up.
Yeah, there was an article in Accounting Today saying millionaires ask for higher taxes to help pay for coronavirus aid. And so there's a group called Millionaires for Humanity, 80 of them, I guess, including Abigail Disney, so a Walt Disney heir, and some other famous rich people. And they're petitioning for higher taxes on the rich to help pay for the pandemic. They're basically saying that they want the changes to be three things: immediate, substantial, and permanent. And apparently movements like this have been around for a while. There was a group called Patriotic Millionaires that was doing the same thing for a more progressive tax system. And they say that charity isn't the answer. The government owes it to the people to take in the wealth and redistribute it fairly. And so, the cynical side of me looks at this and says, well, if you're a rich person who wants to give more of your money to the government, nothing stops you from doing that indirectly in a variety of ways. I mean, you can donate or do whatever you need to do. There's different ways to do that. So part of me wants to wonder if this is, rich people virtue signaling, saying, I take this stance on this issue that the rich should be taxed more, and then turning around and doing nothing productive about it. Or if this is real and you think these people actually really want to pay more tax.
I think like the opposite side of that argument that I've heard from, when I listened to the Joe Rogan podcast, and his kind of take on it is he would love to pay more in taxes because he can afford to, but what he doesn't want to do is throw more money at something that isn't already working. And by just getting taxed more, if it's getting thrown at, government programs that are not working or on causes and such that he doesn't agree with, then he feels like, that's not a good use of his capital. And so he would rather distribute that capital in a different way through donations or through a private kind of thing. So that's, I guess, the other side of the argument, I guess, that a multimillionaire would make.
I guess it depends on what extent you see government role as wealth redistribution versus providing a total, an actual service. Because when you look at it as the government provides these services for me, then it's pretty clear that if it's not working, you don't want to put your money into that system because it doesn't work. But if instead of that, you think it's because the government should be redistributing wealth and that's one of its core functions, then I could see how that would maybe lead you to a different opinion on it.
Yeah, I mean, and I think this is, this is another topic that allows me to wade into my potentially half-baked economic theories. But I mean, we're a consumer economy, and so I think that this agenda by, I won't pretend to know the motivation of these multimillionaires, but if I were in their club, I would say that my motivations would be far more. I would agree with their policy push, but my motivations for it would actually be far more self-serving. And it's because the story goes like this: we're in a consumer-based economy, and if my wealth is generated by business activity in a consumer-based economy, I need consumers who have money. And that's how it works. So I want the consumer class of this country, which is not just the rich and the wealthy, to have plenty of cash flow to consume, because that's what fuels my business and investment growth in this kind of consumer-based economy. That's the reality of it. And the case then for having the government do it instead of just rich folks doing it as if they want or not want is because this idea and this strategy that I'm putting forward only works if me and everyone else in my rich guy club, rich person club, all participate. Right? If I just take my money and give it back to the consumer class and that props up some small part of the economy, it doesn't actually benefit me because it's not happening at scale and it's not happening across the entire economy by mandate. So I would say that I kind of agree with the policy push, but for a much more self-serving reason if I were in their club.
Is that the tragedy of the commons? I think that is.
Yes.
Yeah.
Yes.
I don't have anything else to say on it, but just thought I'd point that out.
All right, Charlie, flexing those econ muscles. All right, I got another one for us that I think will be a good topic point. But so this is a article that's actually in the New York Times, and it's entitled "The Pandemic Has Accelerated Demands for a More Skilled Workforce." So basically, what it talks about is basically remedial. Not, I don't want to use the word remedial jobs, but the pandemic has kind of exposed, and it's something that we've talked about before, the weakness in the American workforce as far as like the ability to shift from one industry to another. So this was a big deal with like in the media about truck drivers needing to like change their course or trajectory or career choice to something else because of the autonomous driving trucks that were on their way. And so I'm wondering if this also applies to the accounting field. Do you feel like kind of accountants need to up their game now that a lot of this is going digital or offline? I thought would be a good discussion point for everybody. But I'd like your guys' take. Maybe they don't need to upgrade their skills.
Well, I mean, I'm biased because I've worked with a lot of technology products and a lot of technological people, and so I've seen a lot of how you can save time with it. And so for me, in my little world, that really seems to fit. You should be learning new things and that sort of a thing. But I know there's a lot of other places that are a lot of other businesses and a lot of other people who have a way of doing things that they're comfortable with and don't want to change and don't want to learn new systems. And so I kind of view that as a mistake, but I also understand how people get that way. And but yeah, I think that the changes are happening in the accounting world just as fast as in any other industry. I mean, we have all these new cloud-based platforms. We have new technologies just designed to help information flow. And yeah, I think as long as that's happening, it's going to continue to require learning.
Well, and I'd even go further than that. I think the days of like a dedicated AR or AP clerk are numbered if AI gets off the ground. I think that at that point, then there's going to be a real shift for the accountant to be able to do more than just, the human side of what's happening now in like a QuickBooks, I guess is the thing to note. And so I think that, yeah, if this accelerates the AI technology to be able to start doing that function of that AR or AP clerk or, the day-to-day accounting tasks that needs a human touch right now, then yes, those accountants out there that are kind of hanging their hat in that realm probably are going to be AI'd out of a job, similar to like a truck driver.
Yeah, I mean, I do definitely think that's true. I don't think we know exactly when it's going to happen. Um, and I think that there's a lot of noise in the industry that makes you feel like it's happening right now or immediately. That's misleading or not exactly true. There's a lot of businesses have propped up and presented themselves as automated or somehow using AI solutions in order to do the bookkeeping or accounting, when in fact they're really using an army of people under the hood to still provide the services. And in some cases, the way they're actually doing that is is offshoring the work and using cheap labor to do that so that they can provide a quote unquote automated service. But that's a whole nother topic about whether that's a good thing or a not good thing on that front. If we're just asking the question of, do accountants need to, what do people who maybe have accountant in their title or something related to accountant in their job function need to think about in the long-term future, and not knowing what that timeline looks like? I definitely think that's true, is that we will not need as many, there just won't be the need for as many accountants doing that kind of clerical level work. And so, I think that the optimistic view is that I think what a lot of people try to promote is the positive side of this, the optimistic side, which is, isn't that great that technology will be able to handle the mundane, clerical, boring tasks that you are bogged down with today, and then you'll be able to do all the analysis and cool stuff for companies like CFO type services. Well, I think what that kind of discussion misses, there's, I think, two fundamental truths that misses. One is that the way it's discussed in our industry, in the accounting industry, is as if there's this demand by companies for that kind of analysis, those kind of services. And if they just didn't have to pay all their money for just basic clerical support, they would pay for all that analysis. They would pay for that higher level analysis, that there's the demand out there for it. But these poor businesses, these entrepreneurs are just too burdened with the cost of basic compliance and clerical work. So that's why they don't pay for analysis. Yeah, I don't think so. I think the truth. People pay for what they value and what they want. And if the marketplace valued a lot of analysis and CFO level service, they do value some of it. We do that for clients. So there is a market for it. But if the market was as big as every company that needs a bookkeeper also needs a CFO doing analysis, we would already see a demand for it. It wouldn't have to wait for the company to have a budget for it. The company would make a budget if it was a highly valuable thing to do in the first place. So I think it's a very accountant way of thinking about things, that, well, I got this part of the pie and it's mine forever. So if I can basically get rid of the clerical work through AI, then I can keep that part of the pie and do this other cool stuff that the company really needs. That's not how real business works, though. And so I just don't see that. And so I think that's one problem with some of the thinking that goes on in this area right now. The other problem that goes on in the thinking is, setting all of that aside. Yes, I agree that the way to go for some people in accounting is, if the clerical and boring and kind of automatable work is taken over by technology and computers, then certainly if you want to be an accountant and have the aptitude and skills, is to upgrade your skill set so that you can actually do the part that cannot yet be automated, more of the analysis and more of the interpretation. But here's the piece that no one really wants to say, which is, if you take the entire universe of all the people doing accounting out there right now, they're not all capable of doing that kind of analysis and interpretation. So right now, the scope of people and roles that have some kind of accounting in it is so broad that you can have people who are making, for low $40,000 a year, and you can have people making $300,000 a year, or more, depending on the industry they're in and how they do it, and the sophistication, expertise, and experience that they have. And so what we're really saying about this is that scope is going to narrow. The people who were making kind of the lower end of the spectrum of accounting roles, that's probably going to go away. And the idea that all the people who live in that zone are going to suddenly now play in the six-figure plus zone, that's probably not right. In terms of, they probably don't necessarily have the skill sets or the aptitudes for it. And it's not about just retraining them. They probably would have never had the skill sets for it, or aptitudes for it. And that gets, that's another perhaps controversial opinion, but that gets into just my overall observation of working with people over a long period of time, that we all have different capabilities and aptitudes. And right now, the accounting profession has a pretty wide range of what we have in it, and the range of what can be in it is going to narrow, is essentially what I'm getting at with that. But yeah.
Well, and I think it goes back to what we were talking about right before the podcast, but about how, as we were talking about how Salesforce has taken off, and how, as that has happened, the job of CRM has changed from, instead of just being a process that the business works through, there's people involved in just getting Salesforce to work. And so that's its own kind of niche industry that has formed as a result. And I think it's the fact that isn't the same set of people who were doing CRM originally, that the people who come in and have tech skills to set those tools up are different than those who were doing the original process, is, points back to what you're saying, which is just that we're not moving people from one job to another. We're changing how we do it. And that leads to different skills, different people. And so,
you brought that up. I mean, that's a very good kind of example of some of the things that we're seeing now and what we'll see going in the future is system integrators, people who have the ability and mindset that allows them to think through, okay, how, what data is needed to do sales reporting? What do we get out of our CRM? How does that integrate with our accounting system? How does that integrate with our reporting? They can understand everything there. They can understand everything in the reporting, in the accounting and GL systems. They can understand the reporting. They can do analysis and interpretation of the reporting. And so here's the thing is that, to belabor the point that I was making earlier is, and this goes back to like AJ kind of said, well, will we have like the AP and AR clerk jobs? If your job is to be an AR clerk, to essentially know that it's time to send a customer an invoice and to track whether the customer has paid those invoices and charge that against the GL when the invoices have been paid to relieve the AR and all that. If that's your role, and you think about all the people who have that kind of role, there's a certain subset of the people who have that role who are perfectly capable of doing what I just described earlier, that they could actually, they either already have the skills potentially, or they could get the skills to be a system integrator and an analyzer and interpreter. They have that capabilities, and for whatever reasons in their lives, they decided that they'd rather just do that AR role because it's something they understood. They could do it. They could clock in, clock out, go home, live their lives, and be happy. And so in that scenario, if the AR role goes away, that person has the opportunity to upgrade, right? And there's definitely going to be that. But experience tells me there's a whole lot of people in that role that don't actually have that ability to be the system integrator or the interpreter or the analyzer. So then what does happen to them? I think that is the big question when this issue is raised in this topic. That is the piece no one wants to say directly, because I think being progressive as I am, we want to believe that the human being is capable of anything, but not every human being is actually capable of everything or anything. And so what do we do with that is a reasonable question.
All right. Yeah. Actually, I have a really good article that dovetails right into kind of what we've just been talking about. So this is an article that's in Forbes. It's by a guy that writes about tech and finance called Tom Tauli, I think. But anyway, it's kind of a wild ride because he gets me in the first where he talks about the success of Nike was basically Phil Knight's, reason for succeeding with Nike was not only his great marketing, but also that he was a CPA, and then he worked as a full-time CPA to pay the bills while Nike was getting off the ground. So basically, he talks about what an entrepreneur should know about accounting is the title of the article, and he lists kind of three things. And so I'll get your guys' take on whether or not he's on point here. First one is leverage a cloud. More you learn with accounting using real-time data. And he claims that you can't get that using desktop, that you need to be in the cloud. He talks about using dashboard magic. So a key advantage of a cloud accounting system is that the automated dashboards can be tailored to your business. And then the last one is think holistically. So financial ratios and metrics are certainly critical for any successful business, but there's still much more you can do with a cloud-based system. That's since you can centralize and hook tools to it like your CRM, payroll, distribution, and so on. And so you have an opportunity to see in real time the good, the bad, and the ugly. The last part of the article is kind of where I kind of thought he was, like lofty in his showing of what he thinks an entrepreneur should know about accounting. But he said, granted, this can get a bit complicated. So you can get your money's worth with a qualified CPA. He or she can be more than just a bean counter and instead help create financial management systems. So I'd like to get you guys' take on whether he's like spot on with these kind of advice or if he's lacking something.
Well, I think there's kind of two things here. I mean, I think it's a good point about having information in the cloud, more easily accessible, more real time. Of course, that's good. But I think that like he talked about the dashboard magic, and then he goes on to talk about how really the dashboard helps you because you should be able to express your business in terms of key performance metrics. Okay, that's fine. Sure, I agree. But you can also do that on paper. I think your idea of like, are you going to look at that information and have a summary that you can run your business by? That's a good idea. Should it be in a dashboard? Maybe, if that's what works for your business. If you're doing it for the sake of just having it be in a dashboard, because that's like the new term you hear a lot about, and you don't think it could be done on paper because you need it in the cloud and it needs to be like right this second, I don't buy that. I think a lot of businesses could be run with good KPIs, monitored on paper over time, and just done diligently,
100%. I think this is an example, this article, each individual item that it talks about has its own merits, just like Charlie said. But this article and the way it tries to tie them together is an example of what's driving me nuts in our industry about trying to link all these good ideas and these things going on in our industry together as if they're all somehow related. I mean, if he had thrown an extra paragraph in there about AI, then we would have had the full, oh, you've got to have AI to make your practice more efficient. And then you got to be rolling out the dashboards. And then all of that has to be in the cloud. And that's what's going to make you a CFO instead of a bookkeeper. And I just want to go, because it is, the connection is what's nonsense. The individual components are fine. I believe clients should be in the cloud. I've been very pushy about that with companies and clients, and colleagues who say, well, we like using desktop instead. And I'm like, well, I understand that desktop versions of software are often more efficient, particularly if you've used them for a long time, they're more efficient for you. But when you're looking at a system, you got to look at what's more efficient for everyone, including owners and operators who might be accessing the system and things like that. So I think there's great reasons. I'm very much an advocate of the cloud, but I 100% agree with what Charlie said. I don't really think being in the cloud and dashboards are really that connected. Yes, cloud software happens to also provide dashboard functionality a lot of times, but you could actually do a dashboard without being in the cloud. So dashboards is its own thing in terms of something that is potentially valuable in and of itself. And how much you need a dashboard and what kind of dashboard, I think, also varies widely. I think the idea of having these like cookie cutter dashboards that are rolled out across advisors or software programs are also mind-numbingly not right or appropriate.
Also might mention that if you're trying to make your accounting system, like track everything, that can be a real problem as well, because it's not set up to do that. If you try to cram too much into like what the software is you're trying to do and overcomplicate things to a point where it's unmanageable, it doesn't matter if you're in the cloud or anywhere else, that's a problem. And it's going to eat up a bunch of valuable time.
I agree with that. I've done that personally. So I just wanted to say that's a really good point, and I've lived that. I'm just because you get lost. You find these technical abilities or whatever, and you figure out that your accounting software can capture all the thoughts of my clients. And so you start setting it up and getting it all in this thing. And then you realize something so basic that you've just glossed over because you're lost in the weeds. And so, yeah, I just want to say it's a really good point. All right, so I've got one more article we can talk about if you guys are ready to move on. We've got accountingtoday.com has an article entitled Better Every Day. It's time for firms to pivot. And I thought it's kind of an opinion piece about what's happening, and I thought it'd be just maybe a good chance to get you guys' feel. But basically what the stance of the person writing the article is that coronavirus is your time to pivot, that change only happens when the pain of not changing outweighs the fear of change. And so I thought that was maybe a good point or an interesting thing. And then it says that the ways that you're supposed to go about this during this trying time is that you should identify your pivot points, understand that client and staff expectations have changed, and then see the opportunity in front of you and just sort of visualize and achieve, And so I want to get you guys' take on whether or not are those the pain points? Are these things that we're citing as fears even different than what they were before the pandemic? What do you guys think?
I think they missed a big one there, and trying to figure out what you're going to pivot to. I mean, I think that's the most important step in the whole process. I mean, if your business is not working right now, I mean, we've talked about it before, but it's probably not just the pandemic. It's probably what's going to happen eventually anyway, and this has just accelerated it. So if you find yourself, or at no fault of your own, I guess, and I'm just thinking about an accounting firm, when I'm thinking about this, is if you were a traditional accounting firm, or in that line of work in the accounting field, and this has adversely affected your business that you own, we're talking about owners here, then I think, the pivot should have happened a long time, or you should have been thinking about a pivot a long time ago, or why your business wasn't being successful.
I agree. I don't have anything else to.
Sorry. Yeah, I was re-looking at the article real quick because I was trying to see if they actually listed any potential pivot points, but I think that was the thing, is even in the way Charlie described it, is that it was more of a motivational article than a tactic article, in the sense that it says look for your pivot points, but it doesn't actually suggest what those pivot points would necessarily be, and that's fine. I mean, I think so. Yeah, I would say I agree with the overall sentiment in the article that a crisis is a good time to consider how the landscape has changed and what new opportunities that is, right? I mean, if you're fortunate, we happen to be, and I think a lot of businesses are fortunate in that the crisis isn't negatively impacting us from a business standpoint yet. And so if you're fortunate to be in that position, then you're able, instead of looking at, well, oh gosh, how do we survive? You get to look at it the other way, in terms of, okay, the landscape's changing. What new opportunities does this afford or raise that we might take advantage of? And so, yeah, I'm very much 100% in agreement with that. That is definitely something that is on my mind, is what kind of opportunities have emerged or currently emerging that I should be looking at, that I might regret. I mean, that's what I always worry about in businesses. Am I going to have regrets years from now for not taking advantage of a moment in time that had unique opportunities that I could have taken advantage of? And so I would say that's the stressor on my mind, is what am I missing? What opportunities might be out there that we're not considering right now or taking advantage of? So yeah, fully supportive of this article.
I can't say I'm not a little bit disappointed they didn't say make a pivot to like CFO services and cloud accounting. So I would have just bubbled over and what?
Yeah, had they said that, that's why I went to look at it, because I was looking for that. Had they said that, I would have seized on it and we would have.
Well, there's also a little upsetting how they were talking about identifying your pivot points, and then one of their major points was that understand that client expectations have changed. And so it's like, okay, so pivot because everybody's expectations are lower, so now you can use that somehow to, it just seems maybe a little bit of a strange connection, I guess I would say. All right, everybody. Thank you for watching. Thanks for listening. Come back again next week for more news and what's going on in the world of business. Subscribe, comment, and like our content. Thank you.
See ya.
Buddy.